Gold has been having quite the year. After hitting an all-time high, it's still grabbing attention and investor dollars. And as gold goes up, tokenized gold is tagging along for the ride. Earlier this year, trading volume in that space hit 1 billion for the first time since 2023. So, is blockchain shaking up how we trade and store gold? Well, let's find out. Gold usually shines the brightest when everything else feels a little shaky. During market volatility or political stress, investors turn to it as a safe haven. Take 2008. The global financial crisis sent gold soaring from about $730 to $1,300 an ounce in just 2 years. During peak pandemic chaos in 2020, it briefly crossed the $2,000 mark. And now we're in the middle of one of the sharpest rallies yet. Since late 2024, prices have jumped from about $2,685 to a record-breaking $3,500 an ounce in April 2025. And the main drivers are aggressive central bank buying, rising global tensions, and shaky markets. Some analysts believe we may be approaching a ceiling, but for now, momentum remains strong. There are 3 main ways to invest in gold. First is the classic physical gold. Think bars and coins. You get the real deal in your hands, but you'll also need to worry about storage, insurance, and premiums. Then you've got paper gold. That's ETFs, futures, and other financial products that track gold's price. They're easy to trade, but you never actually own any gold. Beam has been up to a lot lately. They're not just another blockchain. With a sizable treasury behind them, it's now a whole ecosystem focused on building and backing the kinds of technologies that'll shape what the internet looks like in the next decade. Stuff like DeFi, decentralized computing, and new kinds of dApps. Beam doesn't just fund things and step back. It invests, builds, and connects the dots across different technologies to create something that actually works together. But this isn't just Beam's vision. It could be yours too. With the Beam token, you get influence over how its ecosystem grows. So it's not just about watching cool tech emerge, but being part of building it, even if you're not a dev. You can learn more from their Medium page, which we've linked below, or just keep an eye on what's launching. There's a lot cooking. Tokenized gold is where the blockchain steps in. These are digital tokens meant to be backed by real gold stored in secure vaults. So, which type is right for you? Physical gold is simple and tangible. You hold it, you store it, and you sell it when you're ready. It's widely accepted, but selling can take time and often comes with extra fees. Some platforms do help to streamline that now. Paper and tokenized gold are digital and super convenient, with one of their main appeals being that they allow fractional exposure to gold, but they work differently. Paper gold is offered by traditional brokers. So this is what you'll find on platforms where you buy stocks or ETFs like Robinhood, eToro, etc. It's easy to trade and tracks the price of gold, but you usually can't redeem it for actual gold. Most of it settles in cash. There are different types of paper gold, but in essence, you're holding a financial instrument backed by or linked to gold, depending on the structure. It's also not necessarily backed one-to-one, similar to how your bank deposits work with fractional reserves, but in pretty much all cases, as a retail buyer, you depend on the financial institutions to honor the contract, and there is no fallback if something breaks. Tokenized gold, on the other hand, is designed to represent actual vaulted gold, backed one-to-one. Ownership is recorded on the blockchain, meaning you can transfer, trade, or hold it without needing a traditional broker. Of course, you still rely on the issuer and third-party custodians to hold the gold for you and for old school audits to verify it. So in that sense, it's not groundbreakingly different from traditional systems. It just has added blockchain rails, which can add transparency and convenience to the process, like better liquidity and faster or peer-to-peer transactions. Tokenized gold is usually redeemable, but it's not a simple process. There are things like KYCs, high minimums, fees, and whether they can even deliver it to you. And fees vary too. ETFs and mutual mutual funds tend to charge management and brokerage fees, while with tokenized gold, there's network or transaction fees to consider. So now that you know what tokenized gold is, let's go through some of the largest companies offering it. Let's start with PAXG Gold, or PAXG. It's issued by Paxos Trust Company, a regulated US firm, and each token represents 1 troy ounce of gold held in London vaults. Paxos says each token is backed by a specific gold bar, and to prove it, they drop monthly reports verified by KPMG. They're also regulated by the New York State Department of Financial Services, and this oversight gives them a clearer legal footing to protect investors and adds a layer of accountability. PAXG tokens can be redeemed for fiat or even physical gold, but it's not as simple as clicking redeem. You need to have your identity verified, go through approved partners, and are limited to UK vaults. And also, let's not forget the minimum amount of 430 PAXG, which is about a casual 1.5 million at current gold prices. So yes, physical redemption is basically impossible for retail investors. And then there's Tether Gold, or xaut. It's issued by TG Commodities, a Tether subsidiary. Yep, the same Tether behind the USDT stablecoin. Each token equals 1 troy ounce of gold stored in Swiss vaults, but they don't say specifically which company runs these vaults. Tether claims that all tokens are fully backed by physical gold. In April 2025, they released their first official report focused on xaut. It outlines key highlights like their total holdings and is verified by BDO Italia. We'll probably be seeing these reports every quarter. They're regulated in El Salvador under the country's digital asset framework, which helps ensure that they comply with consumer protection laws, at least locally. How about redemptions? Also available if your pockets are deep, since it's only in Switzerland, only for whole bars, and only after you verify your identity. Plus, fees for shipping, insurance, and handling apply. Other projects are also putting their own spin on things. Kinesis Gold lets you earn yield on your gold holdings, which comes from a cut of users' transaction fees. It also lowers redemption minimums, which makes access more flexible, but it's not perfect. Users have raised concerns around extra fees for buying, selling, and sending tokens. There are even newer projects like Quarium, which claims to be backed by a mix of gold bonds and gold that's still in the ground. There's little information available at the moment, so of course the usual skepticism and due diligence is warranted. Okay, now let's talk about risks. The biggest one is pretty obvious: ownership. Some platforms like Paxos and Tether give you legal claims to a specific gold bar. Others like Quarium just let you own a piece from pooled reserves, and that detail matters, especially in legal disputes or if the platform goes under. Custodian risk is also real. The blockchain might show that you own the gold, but if the vault gets compromised, those records alone are unlikely to guarantee your claim. So trustworthy custodians and transparent audits do help reduce the risk, but they are not bulletproof. And then there is redemption friction. Many platforms set high minimums, charge fees, and require ID checks. And that is if your location even allows for physical delivery. And finally, also regulation. Some platforms like Paxos operate under strict US oversight, but others not so much. Depending on where you live, your legal protection will vary or be limited entirely. Tokenized gold isn't revolutionary, but it's a useful middle ground. You get more flexibility than physical gold and more transparency and convenience than paper assets, but it's not trustless. You still need to rely on custodians, auditors, and the issuer to do their job right. For some, that trade-off is worth it. For others, it's not worth the leap. So, what about you? Would you add tokenized gold to your portfolio? We'll share your thoughts in the comments below. Of course, don't forget to like this video and subscribe to stay updated on all things crypto. Bye.